Okay, today I will teach you equity instrument. When I say equity instrument, that means you are selling shares. But when I say selling shares, alright, in an equity instrument, you are selling shares. Sometimes shares can recognize as a liability as well. But I will cover that later. That is under equity versus liability. But now I'm focusing more on an equity first. So under this equity instrument, yes, it's the same. You need to know who you are. Are you the investor? I can say you buy the share or you issue the share. Or maybe you can say your company sells the shares. So why the accounting treatment, the recognition will be different. Okay? So now, when I say investor buy the shares and issue or sell, so I want to focus on the investor. When I say investor, the issue here is more on the changes in the share price. Maybe initial you buy at the lower price, and in the future your price will increase. Alright, possible increase or decrease. So I think you have learned in your financial management paper. So I give an example. If you buy 3 ringgit, but then the price of your share increased to be $7, example. So your capital gain, good. Your capital gain of your investment, your shares will be $4. Correct? So what I want to say here now, when any changes in your share and price, or we can see any gain and loss of the investment, when I say invest into equity instrument, before this I have teach you investment in debt instrument. Although you invest in debt instrument, you still can consider it as an investment in financial asset. If you invest in shares, also the same, investment in financial asset, but focus on equity instrument. So the gain and the loss, is there any changes in the value of your investment? Changes in the value of the investment. So when I say here class, where you will put the gain and the loss, okay, the changes of the share price, the gain of the loss of the investment, I repeat, okay, the gain of the loss of investment, value of the investment itself. Okay, so generally, if the question silent, generally the gain and the loss will transfer to fair value through P&L. Okay, it is for trading, selling, the gain of the and loss from the selling of the shares, trading, also enter into fair value through P&L. Good. So, however, generally, yes, you put under P&L. However, if the question said the company make an election, if the company make an election which is irrecoverable, means that you cannot change. Once you have elect, the company cannot change. Alright? So they decided to put the gain and the loss into OCI. Alright? OCI not reclassify to P&L once you sell. Okay? So just to share to you what is an election. When I say election, means that any gain arise or changes in price, the gain and the loss, you have to put under OCI. Which once you have sell your share, example, you have hold a share. Now you have buy a share 1,000 shares. So the value is 2,000. Now you got 2,000 initially. Then now the price increased to be $5. So 1,000. Just now you have bought a share 1,000 times $2, 2,000. Now it's 5,000. So the gain of the 3,000 you put under OCI, because if the company make an election, if the company silent, does not make any election, the gain will enter into P&L. However, if you this election, the rules here is not for trading. You hold for a longer period of time. to hold the investment. Once you sell the investment, the gain and the loss back to P&L trading. That means the election will be revoked. Because election, you enter OCI if the gain and loss is not come from trading. If you hold for a longer period, then the share price change, so the gain and loss can enter to OCI if you make an election. Class, please write this. Why company cannot cancel the election once they have elect? If you do that, unethical will come. I give an example. Director will decided that any losses I elect, I put OCI. Gain I put P&L. You see? So to overcome that, once the company has made an election, so any gain and loss for a longer period, if you have elected, it's irrecoverable, alright? Irrevocable. You cannot revoke it. Irrevocable. Alright? Means you have to enter to OCI, regardless of gain or loss. Okay? However, the election only can be cancelled, revoked once trading happens. Our company make an election, our company decided to just put under P&L, gain and loss. Our company, they scared to put under P&L will affect the profit, so they decided to elect, put the gain and loss of the investment into the OCI. But they cannot change once they have elect. Okay? For issuer, the recognition involved is good. I mentioned just now. Share capital and OCE. The old name we call as share premium, but we put under other component, equity, OCE. So this is under equity column. This is considered under asset because you are investing. Recognition of asset, recognition of equity. But remember class, when I say, this is very crucial now, when I say issue share, you must assess first the substance, the definition in the conceptual framework. But for today, I focus on issue share when it's an equity. There are questions when you issue share, but they meet the definition of liabilities, so you have to put the share under liabilities. Also can. But I will share you to later the question in my another video on debt versus equity. Okay? So you must assess your conceptual framework. If you want to put either equity or liabilities. I will only cover it in my next video. Another video. Debt versus equity video. How I want to know debt or not? Based on the conceptual framework, the definition. So for today, I only focus if you have to recognize as an equity in your book, in your SOFP equity. Okay? Now, but for investor, don't worry. It's always an asset. Okay? No option. So I give an example of the question now. Initial. Ali buy 2,000 shares. Buy. So you know it's an investor. Financial asset. Good. Recognized as financial asset. Later in your answer, I want you to explain why it's a financial asset and so on. And class, remember, you also can relate to the definition in your book. Definition equity instrument. For this. Okay? This is considered financial asset. If you are issuer, if you are issue an equity, if you meet the definition of equity, you must mention the definition of equity as well. This is for issuer. For investment, it's only for financial asset. Okay? You must recognize as an equity or not, the definition. So you can also relate with the conceptual framework definition of equity. So first, initial, we go to the financial asset first. I don't know why suddenly I explain on the issuer. So we go to the investor first. 2,000 shares with market price of 2 ringgit. So this is a question on the 1st January. So 1st January 2005, you have buy. So your financial asset will be 2 ringgit times 2,000. So how much? Good. 4,000 in your asset. Initial. What happened to your subsequent? Very good. Your ending balance will measure at the fair value. The latest fair value. So what is your latest fair value here? Good. The price of the share increased to 5 ringgit. 31st December 2005. 5 ringgit times 2,000 shares, because you got 2,000 shares. How much? Good. 10,000. Is it right? 5 times 2, 10. Okay? So class, what happened here now? Very good. You understand. So it is a gain. 6,000. Where you put the gain, class? Later in your presentation, in your essay. Perfect. Because the question silent, you put under P&L. However, if elect, where you put? If elect, good. The 6K will put under OCI, not reclassify to P&L one dispose. Okay, not recycle, also can. So this is if elect, okay? However, for the issuer now, I'm done with the investment. Investment is so simple actually. You just invest, you recognize as a financial asset. Okay? This is ending balance for financial asset. Now, issuer, you are selling 3,000 at the market price. The par value per share is $1. So I mentioned to you, right? Debit cash, how much? Because you receive money, you're selling. 3 times 3,000, good, 9,000. Credit, as mentioned just now, share capital. What is share capital? Share capital measured at the par value times with 3,000 shares. Credit the OCE, other component equity, I repeat. Or you also can put as a share premium, but OCE must mention. Okay? So, what is share premium, class, or other component equity? It is a difference between the market price and the par value. The difference between market price and par value. So can I know, class, what is the difference? So you can see here now, the market price is 3. The par value is 1. So the balance will be $2. Per share will enter into OCE. The $1 is under share capital. So $2 times 3,000 shares. So how much, class? Good. 6,000. So you will get these journal entries. So recognize as what now? Share capital is under equity. Share capital is under equity column under your SOFP. OCE also under equity. So that is the amount that you have to recognize in your book if you are the issuer. If you are an investor, you recognize as an asset. Are you clear? So this is about equity arrangement, equity instrument, recognition of equity. But just to recall you back, I want to remind you, when you issue a share, okay, I remind, when you issue a share, you must assess first the conceptual framework. Either the share meet the definition of liabilities or not. So how? I will show you an example of the question in my another video, as I mentioned just now. This video, I assume I have assessed it. When you issue a share, I assume they meet the definition of equity. So this video only focus on equity. I will teach you how to assess, either how to know this share is an equity or liabilities in my another video. So please remember, if you are investor, you buy the share, you recognize as an asset. If you're an issuer, so you must recognize either equity or liability. So the way how to recognize equity, as I mentioned just now, in this calculation. Very important. Okay, so that's all on equity instrument. Thank you.